Hello friends, hope you're doing great. Welcome to our channel. Today I'll be talking about best stop loss strategy. And I say it best because, trust me, once you are in profit, no one can stop you from taking that profit to home. And you will never be out of the market, out of the money, or bankrupt. So let's quickly jump on to that. Disclaimer: education and information purpose, no investment recommendation, and it's your money, so please take care of it. Now, this is really a good strategy. The background behind it is exit strategy is a result of extensive research, and we are using it on our day to day trading investment execution. And this has an inspiration from one of the best book by William O'Neill, that is How to Make Money in Stocks. Jumping onto the strategy straight away without wasting time, the strategy name is BPD, or base exit, profit exit, day exit. Okay. Now the strategy rule is simple: 6%, 30%, 6%. Whether it is applicable to a long term investor who has a buy hold view, or an investor who has a 6 months, 1 year view, or it is applicable to positional traders who has a view of only for few weeks or few days. Yes, it is applicable to all. And then even the intraday traders can use it very efficiently with a smaller percentage values, because the movement in a day is lesser, right? So you can apply that way. Let me quickly take an example. Okay, let's take an example that I purchase a share of a company ABC. Buy price is 100 rupees. I purchase 1000 stocks and total investment is 1 lakh rupees. Now my base exit says if the stock fall 6% from my base price, that is 100 rupees. So the moment stock reach to 94, I take an exit. It's a hard stop. I made a loss, and it is basically, if you keep that money in an FD for 1 year, you earn only 6%. So the moment you invest and you make a loss of 6%, there is definitely a possibility that it will go further down. So the moment you take a 6% loss, it's a clear cut the losses faster and come out. Because please mind it that if 94 has to return back to 100, you have to earn 6.3%. But if we deepen that loss further and it reaches to 75 rupees, that means a loss of 25%, then you have to take 33% of increment or climb to get back to 100 rupees. So it is always suggested that take a loss quickly and come out of it. So that's a base exit. You should know, if you are an investor, you have taken a stock, it went down 6%, take an exit, no question asked. Timing is not correct, that we'll discuss in upcoming slide. Next is, once you are in profit, how to take that profit home. Okay, no one can stop you from taking that profit. Same example, ABC company, 100 rupees buy price, 1000 stocks purchase, investment 1 lakh rupees. Let's take an example. From 100 rupees, stock went to 140, maybe in a month or 2 months or 3 months. Keep an eye, the moment it reduces by 30% from profit, not from total price, only from profit. Profit is your 40 rupees. So the moment it reduces 30%, that means it reduced by 12 rupees and the stock price become 128. Take a hard exit. That's your trailing. If it reaches to 180, 80 rupees is your profit. If it come back down 30%, just take an exit. Okay, no question asked. If you do that, even if you take 128 rupees, you sell a share at 128 rupees, you will make 28,000, which is 28% profit on any of the share. Now take an example. If you just, if the stock just go to 110, okay, that means 10 rupees profit. The moment it get back to 7 rupees, that is 30% of the profit, sell it and come back. So 107 is exit. No matter what it is, the moment stock goes to profit, you will take some money back home. So that 30% of the profit, we are out. That's called profit exit. That means we take profit home. Theme is once you are in profit, you will carry profit to home. And the last part of this strategy is day loss exit. Same example. Share of the company ABC, 100 rupees share, 1000 shares we have taken, and the total investment is 1 lakh rupees. Okay. Now, in that case, if you see, if stock open at 120 rupees and fall by 6%, that means within a day it is falling by 6% from its open. Okay. Take an exit. So I repeat an example. Stock open at 120, maybe went to 140, 132, but unfortunately towards the close of the day, it closed at 112.8 rupees. Take an exit. We don't want to stay with a stock which can fall 6% in a day. Okay, maybe there is some bad news which may be there, or maybe more to come, then take an exit. And if that stock is that volatile which can fall 6% in a day, that means it will vanish your entire capital in a very quick manner. So do not take risk. If a stock falls 6% in a day, take an exit. Okay. So that's day loss exit. So I talked about three exits. I talked about base exit. I talked about profit exit, and I talk about day exit. Like there was a company IFHL. It just fell down. There was a company MTech. It just fell down. So you have to be very careful with day loss exit also. Now, what is the psychology or human behavior behind this entire strategy? At no point we are saying that stock is bad, because if you take an example, we deal in Nifty 200, so all the stocks are very good. So, and not a recommendation, right? So we're not saying stock is bad. What we are saying is maybe the timing is not correct. Maybe there is a falling market. Maybe that industry or sector is falling. Maybe there is a black swan event. Maybe there is COVID or any such scenarios. Take an exit. Maybe the stock is falling due to bad news in the company, maybe bad rumors, maybe bad result. Take an exit. We don't want to take risk keeping our position when the stock is falling. Maybe we will reconsider the stock once it recovers. Okay, so for now, run and exit. So that's the strategy. Hope you like it. You customize it, and if you are day trader, you have to see what is the trading range of that stock, and then accordingly you can change these numbers to a custom what really suits you. Okay, with that, signing off. Please do share your feedback, course corrections, and thoughts, and thanks for watching. Please subscribe, share, and like our channel. Thank you very much.